Good morning, gentlemen.
Morning.
Morning.
Ashish, can I start with you? I mean, the context for this discussion is digital banking, digital payments, huge opportunity in Africa, important for financial inclusion. But the context of the discussion today is that investment, if you compare the first quarter of this year to first quarter of last year, has dropped by something like 88%. So in terms of a scene setup, what does the outlook look like for the next 5 or 10 years? Are we seeing some kind of cyclical decline, or is this more structural?
Thank you, Sam, and good morning. It's great to be here. Thank you for having me again, FII. So I think, Sam, you've raised a really important point. The opportunity for digital banking and payments across Africa is huge. I mean, you know, there's such a huge percentage of our population which is still unbanked or underbanked, and I think that still needs to be served. We have 80 to 90 million MSMEs on the continent, which will very soon equate to about $500 billion of trade. When you think about 80 to 90% of that being not digitalized, not being lent to, not being properly banked, I think that's another massive opportunity. On the merchant side, I mean, you know, Andrew will be able to talk about that with the visa lens. But so the opportunity is absolutely huge, and with Inter-Africa trade, with the Africa Continental Free Trade Area, which my brother Sumaila and many others have been really pushing and making it a reality, it's going to boost even further. I think when it comes to the investment trend having dropped in this quarter, firstly, I think, you know, global inflation rates, interest rates being high, etc., has impacted that. It is also a global trend. But I think what's very important for African businesses is that, unlike Western companies, we are held to a higher standard. And what I mean by that is we are expected to turn profitable as businesses a lot sooner than the West would expect their companies to turn profitable. And I think that's very, very important for our entrepreneurs and our businesses as Africa to really take note of that, because turning profitable will ensure that self-sustainability is there, and therefore the scalability as a continent is naturally there. So I think the investment opportunity is huge. It's we're scratching the surface when you think about so much to be done. So I'm very, very optimistic and excited.
And I mean, I sort of get what you've outlined, opportunity, firstly the need, and therefore the scale of the opportunity. We often focus on how much capital is needed, and I'll come on to capital later. But I want to come to you, Ken. How do you actually make this a reality? Right, you've got this need. Do we have the infrastructure in place to be able to actually make this a reality?
Well, Sam, thank you very much. And I think that's the vital question, because there are so many entrepreneurial people growing in Africa. You must remember that the median age in Africa is 19. And therefore, it is a generation that is entirely open to the changes that will bring about this whole new digitalization. But unless there is a major effort on what digital public infrastructure, DPI, there's nothing really to be plugged into. And I think one needs to take India as an example, where Bill Gates has spent a great deal of money trying to ensure this digital public infrastructure such that the young entrepreneurs can actually come into the fintech world, but also particularly with artificial intelligence being now sort of growing rapidly. So many of the issues can be solved, but they can't be solved by individual small companies, but drawn together. So, for example, essential to any form of banking would be the nature of security. When you think about it, there are 1,000 languages, different languages in Africa, and voice recognition is going to make a very great difference. Credit scoring will enable a greater number of people to participate, particularly empowering women in Africa. All the signs are that if money paid directly to women, it is much better than being spent given to the other partners. Whether that's true or not, I wouldn't comment, but that's what they would say. But all of this becomes very important within the architecture of the DPI. So it's a great opportunity, and already we've seen Microsoft have put $1 billion into Kenya, and Google are doing the same in Ghana with G42 in the Emirates, and I think increasingly there will be that central infrastructure, digital infrastructure that will enable the younger companies, the fintech companies to grow, and inclusion will become a very much more accelerated way ahead.
So Andrew, coming to you, Visa, you are at the front line in many ways, and you oversee 90 countries, so you've got quite a wide perspective on this. Comment on the scale of the opportunity as you see it in Africa versus other parts of the world, but also this issue of infrastructure and how critical it is from your perspective.
Absolutely. Ashish started talking about it, right? The opportunity's absolutely enormous. And we were just talking about fintechs before, and if you look at there's $1.3 trillion of cash still on the continent. And then you can talk about some of the other things that when you start to digitize cash that will come. The ability to credit score, the ability to empower small and micro businesses. So enormous opportunity. We even believe by 2030, the actual revenue pool that fintechs and financial institutions will be able to work off of is about $65 billion. So massive amount of revenue, also that will do good, right? And will really start to drive a lot of the scale effects we're seeing today. I would say fintechs are scaling despite some of the infrastructure headwinds. But we're now see, regardless of infrastructure, that governments, and Ken mentioned this, digital public infrastructure is really starting to come into place. And there have been really good examples around the world, whether you look at India, whether you look at Ukraine, or whether you look at Kazakhstan, having these layers where the government's solving for digital identity. Really, really important to have that in place, and really inviting the private sector in. So you can start to see when governments digitize services and invite the private sector, and that's a perfect place for fintechs to be able to plug in and start providing great services. If you think about just the potential for micro and small businesses, if you allow them to be able to digitally onboard, get access to then credit, start to digitize payments, even just being able to get access to be able to acquire a business license online. Think about the transparency that brings, the ease of use of doing business. So this infrastructure is absolutely critical.
And you've touched on government and the private sector. And could you just be a bit more specific in terms of the role that you see governments playing in the infrastructure piece, and where exactly you see the private sector making a difference?
Yeah, so governments, I think, do three things really well. So one, they need to create the regulatory clarity, the perimeter around which financial institutions and fintechs can operate, and it should be a level playing field for them. Being able to regulate the use of financial services is really important. Having that infrastructure around digital IDs. Ethiopia is right now starting to digitize and give people digital IDs. And then when you do that and the government owns a database and allows, whether they're fintechs or financial institutions, to be able to plug into it. So if I'm an Ethiopian, somewhere in rural Ethiopia, and I want to be able to then access an account, then they're using government infrastructure, but you've got the private sector that is enabling that. So that part's critical. And then also governments that are, with this digital public infrastructure, you can also really support the private sector with innovation. So you have to have frameworks that create trust and clarity, but not be too overbearing or prescriptive in how innovation works. And I think there's a good balance happening, and that's certainly the role between government and private sector.
I mean, I think that just to add to that there are roughly 400 million adults in Africa who have no formal form of identification. And so therefore, it's a critical part of any form of a financial institution or eventually of inclusion to ensure that that group of people can be drawn into it. But the way in which this is going to be done, it does put a challenge to government, because if you take, for example, the biometric way of identification, very great in facilitating the way in which capital can flow, but also has the big brother element looking out on it. And I think it's this balance between what the checks on the government to enable the private sector to be able to flourish, and not to try and stop it for fear that something is going to be an unintended or an intended consequence of what is actually happening. So I think that there is that key balance that needs to be held in tension to each other.
And so, Ashish, I mean, so government has a role here, but you've got multiple countries, different regulatory systems. How can this be done in an efficient way from the point of view of an entrepreneur?
I think Ken touched on this earlier about the whole digital infrastructure being put in place. But again, as we've seen with the execution of the Africa Continental Free Trade Area, it's not an overnight thing, right? So in the meantime, every government does want their people to be sufficiently banked, sufficiently lent to. They want to boost their respective economies. So I think the key element comes in is that the private sector's got a role to play in terms of, you need the regulation. We need the right technology to be plugged in, which a lot of the fintechs do bring to the table. I think the missing piece has been also having the right balance sheet capability and plugging that in. And when you have that, something that Andrew and Ken both touched on, which is the AI element. So our bank, Y9, our digital bank, we're directly regulated by central banks. We're lending off our own balance sheet. We have our proprietary tech, but our AI is also, we use AI to do the KYC element, because there's a lot of data out there, right? When you think about telecom operators, when you think about, there's so many sources of data. It's about collating that. So we use our AI to do KYC. We use AI to do our credit scoring and our decisioning. So every decision-making process in terms of loan giving instantly is done using AI. And I think, frankly, we're challenging and pushing the team that I would say we're tapping this 30% to its full utilization. So there's so much more that can be done, which will enable scale in a real rapid way within markets, tier 2, tier 3 cities within a country, but also in multiple countries. I think governments are very, very aligned to ensuring there is real access to capital to citizens. I think it's the private sector's job to also kind of handhold the process a little bit, country by country, to ensure that we can actually get the right level of execution done.
And I mean, Ken, you've been thinking about some of these issues, and I want to dwell on AI for a second.
Sure.
And I mean, it should have a transformational effect here. How do you see it impacting fintech and particularly financial inclusion in Africa?
Well, I think that the first thing, and I touched on it, is that one has to recognize that if the DPI is in place, then the AI will function extremely well to enable all the credit scoring to be done, the voice recognition to enable security to be put in place. But the benefits of it to the governments are that the fraud, which it's not endemic in Africa, digital fraud is everywhere. But one of the ways of being able to control it will be through the artificial intelligence systems, which banks and individual fintech companies will have. But also the tax take is going to be greater, because it is able to, you can justify the investment in the DPI, because you're going to have a much more efficient way of being actually tracking where the taxation is and how it is to be paid. So leakage and the friction in the system will be removed significantly when we have an efficient cooperation between the DPI, the public infrastructure, and the individual companies literally pushing forward to make sure that AI becomes integrated into the financial system. And that, I think, will lead to significant inclusion, which is what I think the whole object is.
That's the whole objective. Obviously, capital is essential. Andrew, I think you want to come in on AI, but I also want to, if you could, look at the capital piece. These companies require capital to scale. So how should they be positioning themselves to attract the kind of capital that they need in order to scale? And obviously, I think you wanted to touch on AI.
Sure. Can I start with the AI, if you don't mind? Just to tie it off. So I think they've done a really good job of describing how important it's going to be. I will argue there are two things that are going to happen pretty quickly. One is you'll start to see self-driving commerce for consumers. So you'll cheaply and easily have a personal assistant that will know when it's your daughter's birthday, when it's time to buy something for them. It'll happen automatically and naturally. Same for, you can imagine someone needs to pay for school fees. But I think the other really important thing is it'll have a massive benefit on savings and investment. And that won't accrue just to the wealthy, but those that are more in the mass segment, where it'll be able to really understand your needs, your inflows and outflows if you're a small business, deploy your capital, save and invest for you in a very, very sophisticated way. So I think there's just huge benefits coming from AI. In terms of the capital generation, we invest on the continent. We do a number of things. We've done an Africa Fintech Accelerator program. We've had 2 cohorts already, and we're in our 3rd cohort. And what we see is there's huge appetite still from investors. We've just invested in a few startups from our 1st cohort, and when we do these, after 3 or 4 months of them being in our startups, there's tons of private equity and VC firms that are there. We also see traditional financial institutions partnering and investing. So if you think about the revenue pool and the opportunity, lots of capital still to be had, and fintechs are vital to the ecosystem. It's not a fintech or a financial institution. The ecosystem is very, very complicated. It's much more software-based, and traditional financial institutions realize that they play a really critical role.
So we've got to wrap up, so I just got one final question for you, Ashish. You've got global capital represented here. Where should investors be looking for the best fintech bets in Africa?
So, thanks, Sam. I mean, just to touch on that capital point you asked, I don't want to underplay the importance of the ability to raise capital, but I genuinely feel if our businesses are structured the right way, right level of governance, profitability, real demonstrating self-sustainability and scalability comes with our continent, capital will come. There is so much capital out there. I've said this and I've written it in my book, The Lion Awakes, which is India and China have had their days. It's now Africa's turn, and I really do mean that. The returns you could have made investing in India and China 10 years ago, you won't make those same returns investing in there today. Whereas in our continent, we're just getting started, right? So I really believe, I think, we're the continent of the future. Take the right bets, and let's create some proof of concept, some successful case studies, and capital will come.
Thank you. We could carry on this conversation for another half an hour, but I think we've got to step aside for the next panel. Thank you all very much.
Thank you very much.
Thank you.
Sam, thank you.